Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. So we do have a global retracement from dollar. We have a correction on major dollar pairs. This is due to the press conference from Donald Trump that we had yesterday, as you can see on the calendar. So apparently, what traders are thinking about the situation right now is that they are not sure if the recent comments made by Donald Trump straight after he was elected as a president, straight after we found out the results. Now it seems that we are not sure about the potential stimulus that will happen on the market, right? As you remember, straight after Donald Trump was elected as a president, we got a upswing on stocks, and also a very strong bullish wave on American dollar, because traders were anticipating that the stimulus, this package delivered for American economy will be very bullish for American dollar. We will have a straight path of rate increases. We will have a stimulus and help for American companies. That is why stocks were going higher, but there was lack of details during that press conference yesterday. That is why many traders are thinking that that was just a hype based on rumors than facts. Well, it wouldn't be the first time that happened, right? Many times market movements are based on rumors without facts, so it wouldn't be a surprise, but actually that's what's happening on the market right now. We won't have any significant data today. For market movers, we have to wait till Friday, when we're gonna find out the retail sales from the United States. Okay, as we do have nice movements on the market, let me show you the charts right now. So yes, why not? We can start with cable, because we are talking about the cable yesterday when we were around here. What we said yesterday is that there is a potential triple bottom formation here, but again, as going against the trend, to go against the trend, you need more odds in your favor. So I said I want you not to open positions straight away, but wait for a breakout of the neckline of this formation, of a local resistance, which was highlighted by the blue color. And actually, as you can see, at the end of the American session, we went significantly higher. We broke this level. That triggered the buy signal. And now we're 70 pips higher, and the price is making higher highs and higher lows. And it looks like this the triple bottom formation, which was also supported by the divergence here on MACD and RSI, that this triple bottom formation is on. Now, I just finished an analysis and published it on investing.com, where I explain the situation on cable. Those people, those traders, so you who are watching daily analytical report, could use that situation earlier, because I was talking about that yesterday, and readers on investing.com will find out this situation, this trading occasion today, when we are already 80 pips higher. Well, actually from yesterday it's 160 pips, so it's a pretty strong movement if you ask me. There is a high potential of the price going here to the first resistance, which is located on 1.24, also psychological barrier. The next resistance is created here on 1.2550. As you can see, both horizontal lines are significant. Maybe we can have a small reaction here on this trend line. There is another one here. We'll see. I think that horizontal levels will be more significant for this instrument than those trend lines. But obviously it will be verified by the reality. What I want to show you now is gold and silver. Maybe let me start with gold. So American dollar is weaker. That makes gold stronger. Actually, for the gold, beginning of New Year is excellent. Almost every day we have higher highs and higher lows. Right, as you can see, almost every candle is making higher highs and higher lows. And finally, we reached to the resistance, a strong resistance. We had a pit stop here on 23.6% Fibonacci. But now we can say that we have a real resistance here. This resistance is created by those lows from February, lows from March, lows from June, lows from small pit stop in November. And it's the first time, well, actually the second time, because the first time was here, it's the second time where we can test this level as the closest resistance. Also, together with the horizontal resistance, what we do have here is a 38.2 Fibonacci level of this minor downswing of the second wave, because 38.2% Fibonacci of the whole reversal is located a little bit higher. And this second one, this 38.2 Fibonacci, is located exactly on the place where there is a correction equality movement. It is still $14 higher, and actually we are entering the zone where the reversal is very probable. Reversal is starting to get very probable here. So far, it is too early to say that the gold will reverse. You know that in the long term we are bullish on gold. We wrote that in our outlook for 2017. So at the end of the year, we should see gold significantly higher. But we still have 11 months for that. So it doesn't mean that we won't have a small retracement here. This is a good place to correct this movement, which will be almost $100 when getting there. Right, so as always, wait for the price action to show you the direction. If you will see a bearish candlestick pattern or a bearish price pattern here, that will be a signal to end the bullish correction in the midterm and start retracement. As always, we will see. So far, so good. So far, buyers can be optimistic. If we are mentioning silver, if we are mentioning gold, let's mention silver. Silver is aiming for very important resistance here on $17.15 per ounce. Also here we will have a real test of the sentiment here. Let me show you something from the price action over balance method. The highest, the biggest correction. Here is this one, this one, this one, and this one, right? So this is the biggest correction, this one in the middle. And in theory, once the price will make a bigger correction than this one, it will be the end of the downswing. And for that, we need to see a price here. If we will see a price here, that will be an over balance. So the price will beat the biggest correction in the downtrend, and it creates an opportunity for a strong upswing. As always, we will see. Next instrument is Loonie. And about Loonie, you know that we are talking for a long time. Actually, since here we are advising our traders to go short. Why is that? Again, downtrend. This is a flag. Flag is a trend continuation pattern. We bounced from 50% Fibonacci level, which was also previous high. We didn't manage to go to the upper line of the flag, which was showing us weakness of this American dollar against Canadian dollar. And we saw price declining. The price reached lower line of the flag. And as you can see from the history, every bounce was sharp. So first contact, reversal. First contact, reversal. First contact, reversal. Then we had a contact and a side trend here. Side trend in a rectangle formation. And what happened was a breakout, then test of the recent support as resistance, then the price went lower again. It was yesterday when we are telling you that odds for a bearish breakout are higher, so that was 200 pips higher than now. Now the price is 200 pips lower than it was yesterday. Let me draw that line again. Maybe a blue color will be useful here. Yes. So now we should look for a potential support where the price can finish the downswing, and this can be 23.6 Fibonacci level. It looks like they could use a break here, maybe make a small retracement here. But anyway, this is a good lesson to remember for all traders. It is always good to look at the history. The price was making a contact with a support. That was fourth contact after the support was established, right? It was established here. It was fourth contact. Three contacts were rapid, sudden. There was a sudden reversal. And here we had something different. Here we have a side trend above support. When there is a bearish formation and there is a side trend above the support, most probably we will see a bearish breakout because traders are just increasing the pressure on the support and demand is vanishing. So that is why the price is not bouncing higher. Right? This is a typical pattern. It creates a nice occasion for a reversal. Lesson worth remembering here in this situation. On American dollar to Japanese yen, finally we have something interesting for traders, because usually, well, this is interesting for traders holding long positions, right? Because they are earning a lot of money. But for traders who didn't manage to jump inside this trade, this is not a very good occasion, because the price is advancing higher, and with every higher high and higher low, the risk of a reversal increases, and you really don't know when you should enter the trade. But what do we have here is a potential downswing, is a potential sell signal. Let me explain you why. This is a long-term downtrend line connecting recent higher, lower highs and lower lows as far as from June 2015, and the price went there and stopped. Also, there is a long-term horizontal support as far as from November 2014, and we had a breakout. The price went here but then fell back again. So this creates the situation as a false breakout, false bullish breakout above this horizontal resistance. So bouncing from a trend line gives you a point for the short side of the market. False breakout above the horizontal resistance gives you point for short side. Again, I have something more. You have a trend continuation pattern, which is a wedge, those black lines, which failed because we broke the lower line of the wedge, and we're supposed to break the upper line of the wedge. So it's a false pattern. It also increases the chance for a bearish reversal. Also, again, breakout of a horizontal mid-term support here, which was relevant in a whole December. The price is lower, which opens way to the first support located here, and the support is almost 300 pips lower. So it's a nice occasion to sell on American dollar to Japanese yen. Price failed to hold above here, went significantly lower, and this creates a great occasion to short position. As you can see on American dollar, as we said at the very beginning, we have a global retracement from American dollar. Next instrument, Euro to Australian dollar. We still do have a position here, beautiful position. You are probably sick and tired with this Euro to Australian dollar because we are telling about that almost every time on a Trading Sniper and our daily analytical report. But anyway, this is a great technical setup, so it's always worth mentioning, no doubts about that. So after this false breakout above the trend line and a horizontal resistance, we got a downswing. Now it's maybe a little bit too late to jump with a short position here because we almost reached a horizontal support here where we will be able to experience a bounce, most probably, right? Because after such a sharp decline, and it was a sharp decline, it was 600 pips, right? After such a sharp decline, we can experience a correction, maybe aiming this horizontal resistance here, right? But generally, in the long-term sentiment on Euro to Australian dollar stays bearish. Another instrument where we got a breakout was Euro to Japanese yen, where we have a pennant. Pennant is a trend continuation pattern. A trend here is bullish, so that is why we draw this blue line. But actually it went the other side, right? That is why we didn't say buy, but wait for the price action to show you the direction. That is why you have those two black lines, which were indicating possibility pending orders. So we got a bearish breakout, and now the short position is more probable here because that's a failed formation. This support probably won't be held, and from this position the price can go lower, especially when we do have a correction equality pattern. Almost perfect. 1,500 pips, 1,500 pips, right? Once we will be able to close this day around lows, that will open a way for a downswing. And the next support here is around here, 23.6. This is the place where the price can go And in our opinion, odds for the price getting here in the next few days or weeks are very high. Australian dollar to American dollar. Look, when this 61.8 Fibonacci, 50% Fibonacci, correction equality pattern, trend line, when this failed, traders had no selling pressure here whatsoever. When this resistance failed, the price just skyrocketed and touched the first horizontal resistance here, right? So very interesting situation. We are benefiting from the strength of the Australian dollar on our pair euro to Australian dollar. Obviously, we were telling that the situation here is bearish, but in the same time, as always, remember that you need to check the price action. Price action here was not showing us a possible reversal. That was a good place for reversal, but the price failed to go down. So if they don't want to go down, if the price does not want to go down, probably it will go up. And that's what we often repeat. And you have a great example here. So finally, we touch this horizontal resistance here, and we'll see what will happen here. It is a good place for reversal. Maybe not a whole trend reversal, but at least it is a good place for a correction, right? So I wouldn't be surprised if we went slightly lower from this point and then maybe advanced higher. Again, Australian dollar is strong because gold is going up. Correlation between gold and Australian dollar is very high. Euro to Canadian dollar. So Canadian dollar is advancing lower. That's what also we are talking about. We had a false breakout here of this horizontal resistance. It touched the neckline. Now, if this support will be broken, it will open a way to new lows. Also very bearish situation here. Euro to dollar touched the horizontal resistance, broke this line connecting recent lower highs. There is a chance for a reversal here. Maybe let me check the correction equality patterns. Okay, still have a place for the correction equality to happen. Let me also check this one. No, it wasn't. We didn't have a correction equality pattern. As always, for me, euro dollar is not having a nice technical setup. I'm trying to teach traders that euro dollar is not the only instrument on the market, and there are much more instruments with very nice technical setups, better than on euro dollar. I know that euro dollar has a low spread, but in Alpari most of the instruments have low spreads, so you can also trade there. They have very low spreads and they have much better technical situations than on euro dollar. Euro to British pound, as you can see, this horizontal resistance works for now. This shooting star on a daily candlestick works for now. Reversal is not significant. We are now seeing first short-term support here. As long as the price is above this horizontal support here, the sentiment is positive, and this is just a trend continuation pattern, and we should expect a breakout here. So far it looks promising for the buyers on euro to British pound. New Zealand dollar to Japanese yen locked in a side trend. That is why we stated that pending order will be better here. New Zealand dollar to American dollar. This is a full retracement. This is a very interesting situation, similar to this one seen on American dollar to Canadian dollar, right? A downswing, flag, and a breakout. But here, this breakout may be a false breakout because now the price is advancing inside the flag again, right? Which makes the whole breakout questionable. What I would like to see is the legitimate breakout of this black line. If we will receive that, that will open a way for further upswing. Let's see if we do have a correction equality patterns here. Do we have it here? More or less. Do we have it here? Now. So for this instrument, it's now or never, right? Without this correction. 300 pips, almost 297, 276, 270, right? Also a trend line. So if we will have a breakout here, that will be end of a bearish dream on New Zealand dollar to American dollar. Interesting. Also remember that New Zealand dollar likes correction equality patterns very much. Australian dollar to Canadian dollar is back above this horizontal support here, which makes it a good occasion to for buying. Do we have a correction equality here? Yes, we do have now, so it's now or never. If they will break this resistance here, it will be an overbalance. So we will beat the biggest correction here and a chance for an upswing. Australian dollar to Swiss franc. Not much is happening. On Canadian dollar to Japanese yen, we are still waiting for a breakout. Euro to New Zealand dollar. No correction equality patterns here, as you can see, but we do have false formation. It was a pennant waiting for a bullish breakout. Instead of that, we got a bearish breakout. We came back below the trend line here. I think, well, this is accurate. Right, we came below the trend line, so the sentiment here is bearish back again. American dollar to Mexican peso, after making new highs, they finally can catch a breath. Right now, they can breathe now. We are touching first local support. But here the sentiment is bullish definitely. As long as the price stays above this first orange resistance here, support, sentiment here is bullish. We also have a nice trend line here. As long as we stay above that, sentiment is bullish. Let me show you some of the instruments again. So gold is advancing a potential nice place for resistance, but no bullish, no bearish reaction whatsoever. So we may assume that the price will continue to go up. Cable advancing higher as expected. American dollar to Canadian dollar advancing lower as expected. Here we have a potential reversal, so a potential downswing on American dollar to Japanese yen. Here the price can finally start retracing this movement. We have a short position here. Most probably we will close that soon, capturing most of the profits here. Here potential for a bearish reversal, and Australian dollar to American dollar. After all resistances failed, maybe this one will hold and will start a small correction here. Okay guys, thanks very much for attending daily analytical report with Alpari Remember that trading and investment in financial markets involves an element of risk. And also follow us on Twitter and alpari.news, because we really post our trading ideas there, our observations, and I don't have exact statistics, but I would say that 90% of them, they actually work, and they do work very good, right? So thanks very much, and now we'll have a small break, and after that a webinar about technical analysis. Thanks and see you soon.